Ever wondered how cryptocurrency actually works? You hear about Bitcoin, Ethereum, all these digital coins, and it sounds like a completely different language, right? Well, guess what? You're in exactly the right place. I'm Neil, and today, we're going to demystify the world of cryptocurrency. Forget the complicated jargon and the confusing charts for a moment. I'm going to break it all down for you, piece by piece, in a way that's not only easy to understand, but, believe it or not, actually pretty exciting. Think of this as your personal, all-access pass to understanding what all the buzz is about. We'll cover everything from the absolute basics, like what even is a cryptocurrency, all the way to how you can potentially get started if you decide it's right for you. So grab a coffee, get comfortable, and let's dive into the fascinating universe of cryptocurrency. Alright, so let's start with the absolute basics. What exactly cryptocurrency? Imagine your regular money like dollars, euros, or yen. Now imagine that money, but instead of being physical cash or numbers in your traditional bank account, it's purely digital. Cryptocurrency is essentially a digital or virtual form of currency. It doesn't exist in a physical form like paper bills or metal coins. It lives entirely on computers and the internet. The crypto part of cryptocurrency comes from cryptography. Think of cryptography as super advanced secret coding. It's what keeps these digital currencies secure and verifies transactions. One of the most talked about features of many cryptocurrencies, especially Bitcoin, is their decentralized nature. In simple terms, it means they aren't controlled by any single entity, like a central bank or a government. So now that we know cryptocurrency is, let's get into the nitty-gritty of it actually works. The core technology that underpins most cryptocurrencies, and the one you've probably heard about, is called the blockchain. Imagine a digital ledger like a giant shared Google Doc or spreadsheet that everyone on the network has a copy of. This ledger is made up of blocks, and each block contains a list of transactions. When a new batch of transactions occurs, they are bundled together into a new block. Once a block is filled with verified transactions, it gets added to the end of the chain, hence the name blockchain. This linking makes it incredibly difficult to go back and alter past transactions. The verification process is handled by a network of computers, often called nodes or in some cases miners or validators. Alright, let's talk about something that gets AI of attention when it comes to cryptocurrency, the price. You see headlines about Bitcoin soaring to new highs or plummeting dramatically. It can seem like a wild roller coaster, and you're probably wondering what exactly drives these price movements. Well, just like with stocks or any other asset, the most fundamental driver of cryptocurrency prices is good old supply and demand. If more people want to buy a particular cryptocurrency than sell it, the price tends to go up. Conversely, if more people are selling than buying, the price tends to go down. Many cryptocurrencies like Bitcoin have a limited or capped supply. For instance, there will only ever be 21 million Bitcoin created. This scarcity is a deliberate design choice. Digital gold rush. What is mining cryptocurrency and how does it work? You've probably heard the term crypto mining and maybe pictured people with pickaxes chipping away at computers. Well, it's not quite like that, but it's a crucial part of how some cryptocurrencies, particularly Bitcoin, operate. So what exactly is mining in the crypto context? Essentially, mining is the process by which new cryptocurrency coins are created and new transactions are verified and added to a blockchain. Miners are the people, or more accurately, the computers, who perform this work. They are the backbone of many decentralized networks, ensuring their integrity and security. In a POW system, miners use specialized, high-powered computers to solve extremely complex mathematical problems. When a miner successfully solves the problem, they get the right to add the latest block of transactions to the blockchain. As a reward for their effort, for providing this proof of work and securing the network, they receive newly created cryptocurrency and transaction fees. This whole process serves multiple purposes. It validates transactions, creates new coins, and secures the network. The upside. What are the advantages of cryptocurrency? Now that we've covered some of the mechanics, let's talk about why people are so excited about cryptocurrencies. One of the biggest and most frequently cited benefits is decentralization. Many cryptocurrencies are not controlled by any single bank, government, or company. This means they are, in theory, resistant to censorship. Another key advantage is security. Cryptocurrencies that utilize strong cryptography and robust blockchain technology can be very secure. The distributed nature of the blockchain means that records are stored across thousands of computers, making it incredibly difficult for a hacker to compromise the entire network or alter transaction history. Not all coins are created equal types of cryptocurrency. So you're starting to get a handle on what cryptocurrency is, but then you hear about Bitcoin, Ethereum, Dogecoin, stablecoins. It can feel like a zoo of different digital animals. It's important to understand that cryptocurrency is a broad term, and there are many different types, each with its own purpose, technology, and characteristics. The most famous one, of course, is Bitcoin, often abbreviated as BTC. It was the very first cryptocurrency, created by the pseudonymous Satoshi Nakamoto. Bitcoin is often referred to as digital gold. Its primary use case, for many, is as a store of value, a way to preserve wealth over time, similar to how some people invest in gold. Next up is Ethereum, or ETH. Ethereum is much more than just a digital currency. It's a decentralized platform that runs smart contracts. Okay, so you understand the different types of coins, and maybe you're thinking about how people actually try to make money with them, or at least use them as an investment. There isn't just one way to approach cryptocurrency investment. There are several different strategies, each with its own risk profile and time horizon. One of the most popular and simplest strategies, especially for beginners, is holding, often humorously misspelled as hodling in the crypto community. This is essentially a long-term buy and hold strategy. You buy a cryptocurrency that you believe has strong long-term potential, and then you hold on to it for months or even years through all the ups and downs. The idea behind hodling is that despite short-term volatility, the fundamental value of solid cryptocurrency projects will increase over time as adoption grows and the technology matures. Then there's active trading. This is a much more short-term approach compared to hodling. Crypto traders try to profit from the frequent price fluctuations in the market. Alright, we've talked about the tech, the types, and the investment strategies. The crypto world can seem incredibly exciting, and it's easy to get caught up in the hype. But before you even think about putting any of your hard-earned money into cryptocurrency, there are some absolutely crucial steps you need to take. The number one rule, and you'll hear this everywhere from responsible sources, is do your own research. Seriously, I can't stress this enough. Don't just buy a coin because your friend told you to, or because you saw some influencer on social media hyping it up. You need to understand what you're investing in. What does doing your own research, often abbreviated as DYOR, actually involve? Start by looking for the project's white paper. This is a document that outlines the project's goals, the technology it uses, the problem it's trying to solve, its tokenomics, how its coins are created and distributed, and the team behind it. Okay, so you've done your research, you understand the risks, you've set your goals, and you've decided you want to dip your toes into the cryptocurrency waters with an amount you're comfortable with. What are the practical steps to actually get started? The first thing you'll generally need to do is choose a cryptocurrency exchange. Think of an exchange as a marketplace where you can buy, sell, and trade cryptocurrencies. There are many out there like Coinbase, Binance, Kraken, Gemini, and others, each with different fees, features, and available cryptocurrencies. When choosing an exchange, look for one that is reputable, has strong security measures, is user-friendly, especially if you're a beginner, and supports the cryptocurrencies you're interested in buying. Also, check if it operates legally in your country or region. Once you've picked an exchange, you'll need to create an account. This process is usually similar to opening an account with a traditional online brokerage. Alright, we've covered a ton of ground. Now for this last chapter, I want to highlight a few cryptocurrencies that are often talked about or have interesting developments. Please remember, this is absolutely not financial advice, and you should always do your own thorough research before considering any investment. This is purely for educational and informational purposes, to give you a sense of the diverse projects out there. Think of this as a starting point for your own exploration. First, on any list like this, you almost have to mention Bitcoin, BTC. Bitcoin, as we've discussed, is the original gangster, the first and largest cryptocurrency by market capitalization. It's often seen as a store of value, a digital gold. Its network is incredibly secure due to its massive decentralized mining power. While it faces challenges with scalability and transaction speed for everyday payments, its established brand, widespread adoption, and scarcity, only 21 million coins ever, make it a cornerstone of the crypto market. Next up is Ethereum, ETH, known for its smart contract functionality and being the backbone of decentralized applications. Ethereum's network allows developers to build and deploy decentralized applications, making it a hub for innovation. Ripple, XRP, is another one to watch, especially for its focus on facilitating real-time cross-border payments for financial institutions. Ripple aims to make international transactions faster and more cost-effective. Litecoin, LTC, is often referred to as the silver to Bitcoin's gold, offering faster transaction times and lower fees. It's designed to be a more efficient medium of exchange for everyday transactions. Cardano, ADA, is known for its research-driven approach and aims to provide a more secure and scalable blockchain platform. It focuses on sustainability and interoperability within the blockchain ecosystem. Polkadot, DOT, aims to enable different blockchains to transfer messages and value in a trust-free fashion. Its goal is to create a web where our data is our own and isn't stored on a central server. Chainlink, Link, is a decentralized Oracle network that aims to connect smart contracts with real-world data. It plays a crucial role in the functionality of smart contracts by providing reliable data feeds. Lastly, Binance Coin, BNB, is the native cryptocurrency of the Binance Exchange, used to pay for trading fees and participate in token sales. It has grown beyond just a utility token and is now used in various applications within the Binance ecosystem. These are just a few of the many cryptocurrencies out there, each with its own unique features and potential. Remember, the crypto space is highly volatile and ever-changing, so always stay informed and do your own research. And there you have it, your beginner's guide to the world of cryptocurrency. We've gone from understanding what it is and how it works, to the factors influencing its price, the different types out there, and even how you might get started. My goal today wasn't to make you an expert overnight, because honestly this space is so vast and constantly evolving that even seasoned pros are always learning. But I truly hope this has given you a solid foundation and made cryptocurrency a little less intimidating and a lot more understandable. If you found this video helpful, and I really hope you did, please do me a huge favor and smash that like button. And don't forget to subscribe to Express Econ Geo Finance Insights for more content like this.